It's the last business day for the week. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimezie Obi Iwago. On the program today, bank retail stocks in focus as South Africa's downgrade looms. Kenya's economy displays extraordinary resilience in the face of political uncertainty, and the central bank holds lending rate at 10%. Plus, Namibia not ready to seek a bailout from the International Monetary Fund or the World Bank, even though its economy is struggling. We'll get started now with the markets, and beginning here in Africa, the South African JSE index was trading in the green at intraday, despite speculations that S&P and Moody's may cut local currency rating to junk today. The Reserve Bank left the repo rate unchanged at 6.75%. Now, analysts say the blow to Johannesburg trading stocks from a potential downgrade of South Africa's credit rating is likely to be hardest in banks and retailers, the sectors most vulnerable to local shocks. The index was up 0.24%. And here in Nigeria, the gains by Dangote Cement and Nestle at intraday trade pushed the all-share index further up by 1.45%. In Egypt, the market is closed but rose 1.93% on Thursday as a plan for an initial public offering boosted the index. The offer is expected to kick off a series of about half a dozen Egyptian IPOs by the end of next year, which could increase trading volumes and attract foreign investment. In Kenya, the indices dropped 2.6% on Thursday as profit-taking broke the bounds that followed the upholding of President Uhuru Kenyatta's re-election by Supreme Court on Monday. Kenya's central bank held its benchmark lending rate at 10% on Thursday for the seventh time in a row, citing muted inflation that was expected to drop further. And in the Middle East, the markets are closed for the weekend but traded mixed on Thursday. In Dubai, the index closed 0.46% as Emma Properties added 0.8% to 7.86 dirhams, extending a recovery from technical support at 7.60 dirhams. The stock had slipped ahead of Wednesday's listing of Emma Development because of concerns over the market debut. Our Saudi Arabia's index gained 0.82% as real estate developer Dar Al Karan, the most heavily traded stock, added 3.6%. Home appliance retailer Shaker climbed by 4.7%. Now in Qatar, that index was the only major market to fall, with the index losing 0.72%. Our international equity index complier MSCI said on Wednesday that it might shift to using offshore foreign exchange rates to value Qatar's equities market because sanctions against Doha have made it more difficult for foreign investors to obtain reals onshore. The Qatar real is significantly weaker offshore than onshore, so if it goes ahead, the shift could lead to changes in the weighting of Qatari stocks in MSCI's emerging market index. In an effort to reassure foreign investors, Qatar's central bank issued a statement after the market closed to say it is committed to meeting all of their currency requirements at official exchange rates. And in Europe, equities were slightly higher on Friday morning amid lower liquidity levels due to the Thanksgiving and Black Friday holiday. The market players are also monitoring developments in Ireland and Germany amid political uncertainty, plus some economic data out today. Let's bring in my colleague in Frankfurt, Daniel Koop, to tell us more. Good afternoon, Daniel. It's you today. Good to have you on the show.
Yeah, Conrad is enjoying a very well-deserved day off today, so I thought I would be filling in for him. I hope you're doing just fine.
Yeah, I am. I'm doing great. Now, how much of the political logjam in Germany will have knock-on effect on the country's business confidence and climate, even as the latest data shows the German machine is still roaring strong?
Yeah, exactly. We got a new report today. The Business Climate Index was released for last month. And I can tell you that investors here were fearing with this ongoing crisis of forming a government in Germany, that investors had a little bit the fear that this could be actually harming the economy. But we are seeing another record high of this Business Climate Index with 117.5 points. That's 1 point higher as we saw it already during the months before. Let me give you a brief update basically of what's happening right now here in European and basically in this time German politics. We still have this problem. We remember that Angela Merkel wanted to form a government with the Green Party and the Liberal Party, but that those talks finished last week pretty much without success. Now she has a couple of options what she can do. We could have new elections here coming up next year in Germany. On the other hand, she could be forming a minority government, which would be very difficult for her because whenever she would be discussing, for example, about a new law, she would need to form a kind of a coalition between all those different parties in the German government. So very difficult. And of course, she could continue this grand coalition that we had here in Germany during the last 8 months. But the Social Democratic Party, which is number 2 here in Germany, already said right after the German election that they see themselves not anymore in the government, but as an opposition party. So now we are hearing that the German president, Frank-Walter Steinmeier, is now urging all those parties pretty much to come back to the negotiation table. They will be meeting on Monday and Tuesday again, to talk what can be done, because the German president has been very clear that he doesn't want new elections to happen. So all of this very interesting, very intense political times right now in Germany. And of course, also when you talk to our neighbors, France, for example, Spain, they're really thinking and saying how important it is to have very fast, stable German government, because German government and Germany always had this image of being a very stable government. So yeah, this is going to be very interesting how all of those talks next week are going to continue.
Right, we'll wait till next week to see what happens. But looking behind you there, I can see that the DAX is actually reacting positively to that positive business confidence data that came out today. But let's look at the euro. The euro has been very strong lately. What is the driving force, and is the currency taking the shine off your stock markets?
Yeah, this is kind of very interesting, Shimi, because usually when we have a very strong euro, the euro is right now at about 119. What happens in many cases, actually, that we see shares here at the blue chip index falling. Why is this usually happening? Because a very strong euro in many cases is harming the export business. Most of the companies here listed in the blue chip index DAX depend a lot on export, and what happens when the euro is so strong, products, German products in other countries, for example the United States, get more expensive, which in many cases makes consumers abroad think that those German products would be too expensive, so they would rather buy something else. Now we have this a very strong business climate index today. I just mentioned it with this record number of 117.5 points. Because of this, we can clearly see that the blue chip index DAX is benefiting. We are right now at a level of 13,100 point, which is 1% plus. And yeah, I mean, we have been at this 13,500 point level, and the 13,000 point mark is really something that the DAX has been struggling throughout the last days and weeks. So it's going to be also very interesting where we're going to stand at the end of the year. Some people are saying that we might have a stronger line of maybe 13,500 points. The 14,000 point mark is still very, very far away, but investors do feel that it's very important that at least we're going to be at this range of about 13,000 points, Jimmy.